The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. Looks like right now we got the S&P moving on down 11.5 points right now. We got the Nasdaq down 20, Russell down a little over 7 right now, and looking at the Dow, it's down 100, and Europe is making it all fall apart. Looking on over at gold, it's down $1.50 right now. We got silver down up about 0.5%. And we got copper, it is down over 0.5%. We got oil, it's up 46 cents right now. We got corn on up 4.5. And soybeans, looks like I need to update that one there. So soybean contract is it's flat on the day. Looking on over and checking out our corn contract, add that one on in here. And we'll get that going so that way we can get you updated on all the markets, all the major markets across the board there. We got corn is up a little over 4 points. Euro dollar right now down 128 pips, getting slammed on all this Cyprus news. Went over at pound dollar down 47. Aussie dollar up 2. Euro yen is down 2.19 right now, really getting hit really hard. Looking over at pound yen, it's down $1.49. So it's down as well, but Euro yen's down 1.82%, so massive move. Looking on at US yen, it's down 73 pips. US Canadian is down 1 with US, or not even quite 1, it's basically 1/10 of a pip. And looking over at US franc, it is up right now 88 pips. So with all that dollar strength going on across the board and pushing just about everything, like I said, just about everything on down. So one more market, of course, got to check out. You always got to be looking at the gold market. So add that on in there. We'll add in gold and see where it's sitting right now. It's down just a mere 70 cents. And looking on over at copper, copper is down about 0.5% on the day at the moment. So that gets you caught up on just, like I said, the total market watch and checking out where everything is. And looking on over at the news announcements, as we know, it's just been an ongoing issue with Europe and Cyprus, and that's been talked about quite a bit this morning. We're going to have Bernanke. He's going to come on. He's going to do a little speech here in just a matter of a few minutes, so be aware of that. And it's basically he's participating in a panel discussion along with the Bank of England governor, Mervyn King, at the School of Economics in London. And I'm sure with everything going on, there's going to be some some interesting questions being posed. And so we never know what's going to come out of either one of their mouths right now. So that could have a significant impact on the markets. And I'm sure they're going to start listening in on any comments they can get out of that panel discussion. Or will they just stick to the basic topics and stay away from the news that's happening at the moment? Just again, be aware that is going to start up here in just a matter of 5-6 minutes, where Bernanke and Governor King are going to be doing a speech at the School of Economics. So what about last night? What do we have going on? Well, the Eurogroup meetings, of course, are in full effect going on right now. And so basically they're meeting in Brussels, and it has the Eurogroup president, the finance ministers from all the EU members, and they're discussing a lot of issues. I'm sure right now Cyprus being at the top of that discussion list. And so they're basically meeting right now more than anything because of Cyprus. And they're trying to figure out, you got this game of poker, and who's going to fold. And is it going to be, is the EU going to fold and let Cyprus fall? Have them file bankruptcy, get kicked out of the EU, and then have that contagion risk? Is Cyprus going to fold and go in after massive deposits? And, they still got their banks closed. Everybody's trying to figure out what to do next. And, they're in quite a predicament. And I was reading it. It was really interesting and sad. I was reading through a report by a journalist that's out in Cyprus talking about how he went out there and years ago, and it was great. And then they decided to go ahead and merge in with the EU. And, of course, now they're questioning that decision, trying to figure out, was that the best move? And he noticed he went in, and he's kept quite a bit of cash on hand just in case something weird happens, fortunately. But he went in to pay with his debit card to buy medicine for his child. and he wasn't able to use his debit card. And the pharmacist stated that they're no longer taking credit cards or debit cards because basically they can't go in and write checks out of the bank at the moment. And they said that the vendors that are supplying the supplies to him right now are only accepting cash. So more and more places are actually starting to turn off the debit and credit card machines and just accepting cash out there, as they're trying to figure out what really is going to happen with the Troika, and as they come in and they start, having their conversation about what they're going to do. And, I don't know what happened, but remember Mario Draghi said he was going to do anything it took to make sure that everything stayed stable. And if this is what anything means, then that's, of course, worrisome for the entire EU. And but right now people are just trying to figure out how to do it, and that's why they have. It's fortunate for those who have cash on hand, and then very few ATMs are dispensing. Most of them are out. Those that do have them have armed guards at them, just making sure that people don't cause any further problems than what's already happening. All right, so that sort of sums up the summary of what's going on right there. Let's go ahead and look at what else is going on. And what we can see right here is we got like I said, we got Chairman Bernanke, a few minutes, going to be talking. As far as tonight, nothing major going on to worry about as far as, scheduled announcements for anything now. Going into tomorrow morning, we're going to have a few things. The Bank of Japan governor's going to come out. He's going to do a speech, and he's testifying before what's called the Diet in Tokyo. So that's going to come out. That'll probably have some impact on the yen. Not necessarily a tradable event so much as just one that you need to be aware of. And then the RBA Governor Stephen's going to come out, and he can for the Aussie. That's actually going to happen at 12:45. He's going to speak at the Australian Security Investment Commission's annual forum in Sydney. So that could have an impact, depending upon what the conversation is. But that doesn't happen until 12:45 a.m. Probably not going to be the biggest Aussie dollar mover unless just something surprising comes out of that conversation. Rolling on in, like I said, there's nothing major tradable in the overnight session. We roll into the morning, though. We're going to be able to go into core durable good orders right here in the United States at 8:30 in the morning, and also the durable good orders. And then an hour and a half later, we're going to have the CB consumer confidence and the new home sales report. It's going to be rolling on out. So on the core durable good orders, and checking that out, looking at what markets could be tradable right there on that. So I'm pulling them all up right now and doing a quick analysis for you. And usually we've been sticking to U.S. yen, and that over and over again, is even as I'm seeing right now, has been the outright, really, I guess you could say, winner between the different currencies on U.S. announcements again and again and again. And it has proven true as well on this announcement. And I'm sure if I go through and I look at just the durable goods, we'll see the same thing. They come out at the same time. So U.S. yen would probably be the one that if you want to go in and do a straddle or a strangle on Nadex. A straddle's on the spreads. And I do like the straddles a lot better than the strangles. Like I said, you can use either one. The problem with the binary strangles is basically you have to be right and it has to move far enough, or in one direction or the other, or you lose. Whereas a spread, one side could lose everything, but the other side could be slight loss, break even, could make enough to actually break even for the other side of the trade, or it actually does hit the profit target and you have a really good profit on the trade. So that's your U.S. yen report right there. Going to be looking at that one at 8:30. I'm going to go ahead and check out the 10 o'clock one and see if I see any other pairs that we might want to be aware of, because like I said, we have two reports coming out with consumer confidence and new home sales both coming on out. And looking at it right now, it's like we got Aussie dollar moving quite a bit. We got U.S. yen. Overall, time and time again, U.S. yen looks like probably the best out of the entire group. So U.S. Canadian is up there a couple times, but Aussie dollar, U.S. Canadian, I guess we could say tied for second. But U.S. yen is clearly showing first place on all these reports right here. And then if we go down and look a little bit lower, we're going to have the new home sales. So on new home sales, that can impact obviously a lot of different things. Of course, indices, everything else. But just to let you know what forex pairs to check out. Looking at U.S. yen, Aussie yen, some big movements right there. U.S. Canadian, some decent movements. But U.S. yen, again, over and over, has been just about every time out of the last several times. It's either been Aussie dollar or dollar yen. So you could really take your pick. But some of the movements have been massive recently on the U.S. yen. I mean, just some really, really large moves off of those two announcements. So what I'd be focusing on for a straddle for a news trade tomorrow would be U.S. yen at 8:30 and 10. And again, how do I do that? I go in and I use the spread scanner. So if we log on over here, we pop on TFNN. What you can see is you can go in and just click on the Diagnostic Box Spread Analyzer. By clicking on that right there, then you can sign up, get free access, 2-week trial, And you'll be able to get access to a lot more than the scanner. You're going to get access to tutorials, take you step by step through the spreads, through the binaries. You get access to ask me all the questions you want. You get access to the deviation levels that get updated every evening. But again, you also get access to the scanner. So right here is I'll look at the deviations first. So if I'm doing US yen, I'll scroll on down. I'll look at where the deviation levels are because I want to sort of stay inside one deviation. Plus and minus one is ideal. And ideally take profit as soon as possible when I can do a one-to-one risk reward on the news. And the reason I like trading the news this way is it works a lot, or it has worked a lot so far. But I can go in with relatively low risk. And so I can go in and go, you know what, I want US yen. I want a one-to-one risk-reward ratio. And I don't want to risk more than $100. And then I can go in and it'll show me all the buys and sells that are set up for that. And, are there any really good trades at the moment that could work out well for me? And so, of course, before the news, you're going to get a lot better, choices to look at on this. So when I look at that, then I'll be able to, find the best spread, within seconds. So this one's sort of a little deeper in the money than I want. I'd like to find one that's a little closer to, where the market price is. You can see the live market there on the shading. That's where the live market is. So it's almost in the middle. And I prefer to find one, like I said, that's a little bit closer. So that way I can get a better risk reward. Now, in the morning, usually you're going to find that. After the movements happen in the day and everything, you'll have to wait for some new spreads to come out. And right now we really had our last spread just come out, the 1 to 3 o'clock, because the market closes at 3 along with the FX pits. And so when the FX floor closes, then Nadex closes as well. But it does open early. It opens with the electronic. It actually start trading again at 6 o'clock. So you get to get in sooner, but you get out at the same time as the pits close, unless you're trading certain binaries like weekly binaries can stay open. But I'm talking right now just about the spreads. But you can go in, you can look at different trades, you can find different markets, and just try to find one that lines up with the risk reward that you're looking for at that moment. If there's one there, great. If not, then that's when I would probably hop over and I'll look at binaries. So if I can't find a trade that lines up, and there's only, say, like it's moved down, there's only one sell spread available because it's already moved down so far, then that's when I'm going to hop into Nadex. And I'm going to go in, I'm going to go, I don't really see anything that's going to work great for me for, this market right here on the spread. So now I'll go ahead and check out the binaries. So I'll go Forex binaries. I'll hop on down to US yen. And then I could check out, like dailies and see, is there a good risk reward trade? And as you can see, $3, $4, whatever. But I want one that's ideally as close as possible to a deviation level that gives me a good 1-to-1. So, if I'm risking 10 here and I'm risking 6 here, that's $16 risk. If I can get out of the trade and make $16 plus the risk on the other side. So if I have $10 risk over here, or right now it's 8 and 8 because the market's moving so much. But so right there on those two trades, I could buy this one and I could say sell this one, and that would give me a pretty low risk and very low risk actually on the trade. And I just combine the two together. And I'll talk a little bit more about that when we come back from this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. What I was talking about before was doing how to do strangles on the binaries if a spread is not there. Again, I prefer the spreads. And you can even decide if a spread's not there, you don't want to do it, or maybe you want to hop over and look at the binaries. Well, if you decide to go ahead and hop on over and look at them, then what you'll notice is you can go and you find a couple, binaries that are as close as possible with as little risk as possible. So if I go in here and I find this one at $5, this one over here $12, then my risk on the trade combined is going to be about $17. And so what I'm going to need to do is put in an order to, buy for 14, sell for 96, and that sounds sort of weird. The buy for 14 sort of makes sense. It's 14 to 0, goes up to $100, so the most you can make on the trade would be like $85 on the trade. But when it's sell for 96, that sort of throws a few people off. So remember, we can sell higher first and buy lower second. And the maximum value on a binary is 100. So if I sell at 96 and it goes all the way to maximum value, the most I could lose is $4. $100 minus 96. Then I could buy it back at a lower price. But I don't have to worry about, massive margin or anything. If my risk is $4, then you know what? My margin is $4. And so I can go in, I can take advantage of that trade by putting those two things together and basically looking at about a $20 risk on the trade. So I need to make $20 to be at break even. And then in addition, I need to make the other side of the trade's risk. So in this case, like if it went up, I need to make 20 plus the $4 risk. If it goes down, then I need to make $20 plus, in this case right now, the live price, $13 risk on the trade. So whatever the combined risk is, plus the risk on the other side, because obviously I'll keep my $4 risk if it goes down, but I'll lose my, say, $13 on the long, the one I bought, if it goes down. So if I can combine those two risks together and then buy it back when I make the total risk plus the risk on the other side, then I'll be able to take advantage of a 1-to-1 risk-reward ratio. And what I want to do is I want to get in 1 to 15 minutes before a news announcement comes out, and I want to set my take profit right away. So if I was targeting these strikes, then I'd want to set my take profit to get out when it hits the strike. And what price will it be when it hits the strike? Well, basically it'll be at $50. So if I know it's going to be at $50, then that means I can get out at 50. So if I bought at 16, get out at 50. If I sell at 96, get out at 50. But I have to factor in a couple other reality pieces, okay? So it's 50, but, you know, we have a reality of like bid-ask spread that you may have to deal with. So if you're looking over here, you know, different contracts and stuff, you may see the bid-ask spread. He's at, you know, $2, $3, $4, whatever. And then also, what if it only misses your strike by a couple ticks? I mean, do you really want to have a trade that's that far up and then, you know, say it's up $20, $30 and, you know, you've more than covered your 1-to-1 and then you don't get out? No, of course not. You want to be able to take profit off. So if I know it's going to get to 50 and I take away a few bucks on each side, then we make it like 53.47. And then let's say I want to give a few dollars in addition to that for, you know, just in case it doesn't quite hit my strike, then 57.43 is sort of the general rule of thumb I'll use. Now, if I can get out even faster on a 1-to-1, then there's no reason not to. So if I can go in there and it only has to move 25 pips and I'm 4 pips, you know, I'm at 96, and if it has to move 25 pips down, then I go, you know, 84, 74, 69. So I can buy back at, say, $69 on the trade because it's a 1-to-1. But I always want to get out by the time it hits that strike. And if I can't get out at, you know, either if I can't buy and sell as soon as 43 at 1-to-1, I don't want the trade. If I sell and I can't buy back as soon as 57, I don't want the trade. So I could always buy back sooner, but if it has to go even further, meaning if the market would have to go higher than my strike to get out at a 1-to-1, I don't want that trade. So I want to be able to get out at 43 or 57. That means that if the market hits my strike, I can immediately get out of the trade, and I'm not depending upon it going just super far in that process. And it's pretty simple. It sounds complicated, but if you go through and you just start demo trading it, and you'll be amazed at how much easier it gets. And, of course, you can always ask questions over in that TFNN area. But if you go into TFNN.com, click on Nadex, and what you'll see right here under Our Products is you'll see the Demo Account. On Demo Account, go ahead and put your username that you want, your first name, last name, phone number, email address. Click Apply for Demo. And they'll get you a demo hooked up right away. They'll send you an email address with the password, and then you'll be able to log in. Now, to get a live account, just click on Create Account and click Start. And it takes about maybe 5 minutes from start to funded. And you can actually start trading with a live account. The minimum deposit required to trade with a live account is only $100. So it's very easy to get in and get started. You know, I do suggest you get that live account set up. And then if you want to email me, I can let you know how to actually get that demo extended out much further than just a couple weeks. You get a couple week trial, but you can get it extended, you know, by a year, even more if you need it. Just let me know if you need help on how to do that. And I'll be glad to help you out. All right, stay there, and we'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading involves risk and may not be appropriate for all investors. Futures and options trading in
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to Nadex, and we got the Nadex products, we got the bull spreads, we got the binary options, we got all this stuff that you can take advantage of. So if you have not got started with Nadex, definitely click on that Nadex banner on the TFNN.com homepage. Click on Create Account or click on Our Products and Demo Account so you can get going right away. Then you're going to go, well, how do I take advantage of all this stuff that's going on? How do I use it? How do I learn about it? How do I learn how to use it? Then hop on over, like I said, check out the Diagnostic Box Spread Analyzer. We'll be happy to help you out and go through each one of the pieces and how to put them all together, because it's new, but it's not as, it sounds funny, it's not as hard as it looks. So if you've traded anything, you can trade this. It's just now you're going to be able to have more leverage and less risk. And some people are like, well, it's new, so I don't know, I don't understand. I don't know. Do you understand less risk? Do you understand higher leverage? That's a fantastic combination when you can put less risk and higher leverage together. Usually those things, it's sort of the danger, right? You get more leverage, which means you get more risk. But by doing it this way, you don't have to deal with both sides of that coin right there. You get to take advantage of the leverage without having to take on the disadvantage of the additional risk that comes with leverage. And so as you're going in, and let's say for some reason you want to go in and you want to fade the S&P, all right? You're saying, hey, things are starting to look like they're going to pull back now. The market's moved down a deviation. And so if you want to go in and do that, you could actually go in here and you could say, I want to buy the S&P. I don't want to risk more than $100. I want a 1-to-1 risk reward. what amount could I do that for? And so, the S&P's right now trading right around 1542. And so you go, oh, this is really close to break even. That's $27. Okay, well, I could do 5 of them. If I did 5 of them, then I'd actually have, about $150 risk with all the fees, everything included. About $150 risk on that trade if I want to take advantage of that trade. And my margin would also be, $150, which is fantastic. Instead of, $400 or $500 for intraday margin, talking only $150. And you're talking about a 3-point stop loss. Well, how easy would it be to have a 3-point stop loss on the S&P right now, especially after the big move down that it just had? So very simple thing to take advantage of. Also, you could decide maybe you want to go short, but it's fallen so far, you're a little nervous it might fly back in the other direction. You don't want to get stopped out. So one of the things you can do, especially when you look at this right here, and I'll show you, we got both sides, and there's really only one S&P short that's even available, is you can combine them together. And we have this built into the hedge scanner right here. You can combine them together to say sell 1 ES and buy 5 spreads if you think the market's going down. The risk on this is basically, almost nothing on the trade. So, because you're able to go in there and buy this for about 1542.6, you got bid-ask spread. But as far as actual movement risk, you're talking maybe a tick movement risk in there. And then the distance has to drop a couple points because it has to get outside the spread. So as you'll see when I highlight the spread up here, it'll narrow it down. So it's got to get lower than the spread at 1540. Once it does that, then you have unlimited, uncapped profit on the way down. But you have a hedge all the way up to 1550. So basically you're giving yourself a 10-point stop loss for basically a tick of risk. And that's fantastic. I mean, the spread will make money on the way up, while, say, the S&P is, if it was losing money on the way up, if you're short it. But it'll, make money to hedge you. But if it goes down, it'll stop losing money. So as soon as it's moved that couple points and got outside of, the S&P has got outside of the spread, or what I like to call the box. And there's a lot of different ways to combine the spreads. You can do straddles, you can do hedges, you can trade them by themselves, you can do ratios. There's a lot of different things that you can do. And so I like to bring just a few of those different ideas for you on different shows as we talk about them. So now let's go ahead and let's zoom in. Let's check out the deviation levels. And what you'll see right here is we got the diagnostic deviation levels moving on down, and they're down right now. We almost hit 1 deviation over here on the S&P, and if we tighten up that stop a little bit further, we can see sort of, would the stop have been hit yet or not? And one of the methods I'm always teaching is when you go in and you look at the stop, you want to move to the low, okay? Or I'm sorry, on the short side, we're going to move to the high of the bar that closed below the deviation level. So this bar right here closed below the deviation, it's moved on down again. Now, one thing has happened that will allow us to move it down further, is it hasn't closed below the 1 deviation yet, but it has closed back above this 0.7 deviation level over here. And since it's done that for us, then any subsequent bar that closes below it, so let's say this 10-minute bar here in the next minute closes below, which it looks like it may right now. If it does that, then we'll be able to move down our stop even further, giving ourselves, basically room to let our profits, run, but also not so much room that we give them all back. So right here, this bar is going to close literally in the next, 30 seconds or minute, and we'll be able to use that to tighten up our stops once it closes up. And so right here, you got to stop at this point, and then again, you'll move it down again, and so we can even delete that one out. As soon as this bar closes, we'll be able to delete it off and trail our stops all the way down. The deviations, that's how I use the deviations to help manage the profit side of things, because Nadex helps you manage the risk side, but you need something to help you manage the profit. And that's where the deviations come in. They can help you for direction to a certain point. They can also help you for reversals. And as we can see now, it has went ahead and closed below that, so we can get rid of that one. And now we've moved our stop down. We've tightened it up and blocked in any profits from the down move that's already happened. But you gotta know where to tighten those stops. And you also want to give yourself some room so you don't just give all the money back just because you're so nervous that you tighten your stop too soon. And we can go over here. We'll look at a couple of the other indices. We got the Dow. And the Dow's already moved down below 1 deviation. It just closed above this deviation level, and it looks like it just almost closed below this one. So we got a little bit more room left to be able to move it down, but we can see right there that it moved down. And this one, we're looking for a little bit further move down, and then we'll have it for tightening the stop even further than where we have it right now. We can go in, we can check out the Russell, and on the Russell, it moved down. So we had it really worked out rather well. So right here, we were able to move down tighten this stop. Didn't have near as big of a move, had a half deviation, but it is a +5 to a -5, which is a full deviation move. And right there, so we stopped out. We're out of the Russell trade right now. So no longer short on the Russell. Look on over and we can check out our NASDAQ. And on the NASDAQ right here, pull that one on up, and this bar closed below it. Have not got a chance yet to move it down, but as soon as we have another bar closed below this deviation, because we tightened it on this one, but then it closed back above the deviation, and so now we're waiting on a subsequent bar to close below it, and then we can tighten it again. So, and that was right down again, right to 0.5, 0.71. As you can see, it moved one deviation level. And where are we getting these deviations from? Are these ATRs? No. Are they pivot points? No. So are they fib levels? Not in this case, no. Now you can tie Fibonacci levels if you use them correctly, like Gartley's and things like that, into them to help you get confluence. But what they are is they're based on implied volatility. So of the underlying options in, say, the the NASDAQ or the S&P or the Dow. And we pull that out because that's the expected movement built into the price of options. And then we go, well, based on how far all the participants in the option market say the market's going to move, how far will it move today? And we tie that in and we get those numbers in black and white. They get updated on the site every night. And you can go and you can access them. We can go and look at a couple other markets. We got gold over here moved on down to 0.7. And as you can see, it bounced right off of that level. So if you would have tightened your stop, you'd be out. Came on back up right up to settlement, and as you can see, these oscillation zones happening right here at the deviation levels. If we hop on in, let's look at silver. Let's see how far it's moved today. And came on down to 0.5, 0.7, back on up to settlement and up to 1, almost up to 0.7 positive. So we got a solid, definite 1 deviation move, almost 1.5 deviations from top to bottom. And we can go in and we can look at some of our ag markets. Right here on the corn, we got it moving down to almost down to half a deviation. Let's back up on that chart a little bit so we can see everything. And we can see it just sort of oscillated around. Haven't got a chance to tighten a stop. Really just been chopping at a whole lot of movement that we can take advantage of easily, at least. And then going on over to soybeans. Soybeans did give us a move on down. Let us tighten up our stop. And, with that, tighten it up, closed below it, closed above it, closed below it again. So we're able to tighten the stop right here before getting hit out on this bar. And the market sort of just oscillating around before it finally moved on up. And I guess you could say filled the gap from the settlement right there. So we saw all the markets fill their gaps this morning. And, at least the major markets right there, like the major indices. And we can go in and we can also look at these, maybe you're a currency trader or maybe you're an energy trader. So we can go and look at something like oil. And on oil, you can see it went in here and moved up, spiked up. I mean, really like a hard spike right there above. And normally that would knock you out of the market. But if you look at it, where our stop was based on the close above, not out. Comes on down here, moves on back up. This bar finally closes above. We're able to tighten it up again. This bar closes above right here. And so we're able to tighten it up yet again. And then this bar closes above. So we're able to tighten it up, again on that bar. And basically at 1 deviation is where we walked in a deviation move. It goes up, it moves up to 1.5. Didn't look back, decided to turn around and come on back down. And I'm sure there's quite a few plays you could have used to take advantage of that. But at least with this, you're able to walk in a good move versus here. I mean, unless you had this deviation method, it'd be very easy to get just knocked out of that trade. You wouldn't have locked in some additional movement. And some traders will go in and go, that's my profit goal, so I'm out. Or hit a deviation, so I'm out. So it all depends on how far you want to let your profits run, if you want to scale out. So you could have been in here, it moved half, maybe you had on 3 contracts. You took off 1, it tightened up again, and then so you have a stop right there. The third one hits the 1.5, which usually it doesn't hit that. You decide to take off another one, you have 1 left, it comes back down to hit your stop, and you're out right there. So basically you get out of 1, 2, and then 3 contracts. And so there's just there's a lot of different ways to combine it, and it's that's just trading, right? So you got to go in, you got to figure out how you want to scale out. It's not about your entries as much as it is about your exits. And though the entries are important, they are paramount, those exits are more important. Because I've went in and I've sat side by side with another trader, and he's went long, I went short, and we both made money because our exits and how our exits were put together. All right, so this moves on up, and we're looking at natural gas. We got a 0.5, we got a 0.7, and we would have tightened the stop right here because it actually we wouldn't have tightened that stop there because we actually had a stop right here already. We got stopped out, so we'd have been out on this, catching the move up before it decides to come down, spike it, and finally come on back down. Nice thing is, it was right. When it got hit, even though we did get a spike up, we still got a move right back down, so that did work out well for us. And like I said, you can also tie this into currency pairs. So we got the euro dollar moved on up 0.5, 0.7, pulling on back to settlement, and then down to -5, -0.7, -1, and then now we're all the way down here to -1.5, and we're looking at maybe closing back above the 1.5 right now, but right now that'd put our stop right there on euro dollar at a high of 1.2868, and so pretty close, maybe a couple ticks above that for a bid-ask spread. I like to have it like one tick above, and then the bid-ask spread, which on euro dollar is usually going to be a tick or less, or pip, whatever you call it. So 2870, and so if it hits that, then that means we basically think the move's over. It's going to go choppy or go the other direction. So, but we're not really looking for it to continue to decline if it does come back up and hit that stop right there. And then if it does close above, this bar looks like it might want to close above the 1.5 deviation. Then if another bar moves below it, then we'll tighten the stop yet again, even tighter on euro dollar to sort of let us know, okay, that run is over. And if we go in, check out the pound dollar, and we can see right here, pound dollar moved down half, 0.5, 0.7, spiked through the 1, came on back up to 0.5, working its way back down, now just sort of oscillating in a zone. And you would have been able to tighten it up right about here, and had your trade right there. And it looks like, if you were to try to go short again, as you can see, it's just choppy. It looks like it's coming right back to that same zone. And so you get about 20 pips or so, not a big deal. You need to expect to not get the tops and the bottoms. If you can get 70% of the middle, you're in the top class of traders. And so let's go in and check out maybe a couple other pairs. We'll look at, we got pound dollar up right now. Check out our Aussie dollar pair. And over here on the Aussie dollar, moved up, pretty sweet, nice, clean move on Aussie dollar. So we got to move over here, moved on up, and looks like we have a deviation of 1.04, what is that, 68, and so it closed right on it, so we couldn't tighten it yet because it's got to close above it. If I want to get it close above it, it does close right there. When it does, we get stopped at it, moves up just a little bit further, so you're talking another 10 pips or so, oscillates, does a whole lot of nothing, and then falls on back down. And we can go and look at U.S. franc, U.S. CAD, and U.S. yen as well. We have coverage on these right now on all the U.S.-based, the main 6 U.S.-based pairs. So euro dollar, pound dollar, Aussie dollar, U.S. yen, U.S. franc, and U.S. CAD. And that's what we have the deviations on. We have them also on multiple futures markets. We'll be adding in about 40 futures markets here in the next month or two, and we'll also be adding in over 3,000 stocks, ETFs, and indices. And let's see, as we can see right here, the market goes in. There's a spike right out of the gate there, and basically not a whole lot going on, though. As soon as that spike happened, it was over. It alleviated. U.S. franc decided to start moving on up as the dollar starts gaining strength against everything. And as it does, we try to ride this trend as far as we can. And so we are able to tighten right there. We're able to tighten it again right there. Market spikes up, closes above it. We can tighten it again. Closes below it and then above it, so we can tighten it yet again. Closes above it right here. We can tighten it again. Closes above it and then below it, and then closes back above the next deviation. We can tighten it again, and then closes above it, and so we can tighten it again. So right there, U.S. franc, nice move. Deviations did a great job helping you trail that stop all the way up. And right now we have a low 0.9479. So add in that pip, and then another couple pips for that spread 9476. And looks like it may be looking to hit that stop any second now. As soon as it does, we're flat or reversing on the U.S. for the rest of the day. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Let's go ahead and see what we got lined up for the rest of the week. And so we already covered today. Tomorrow we got a little bit of that covered for you. Core durable goods USD yen right there at 8:30 a.m. Eastern Time, 10 a.m. Eastern Time. We got the CB consumer confidence and new home sales coming out. And then if we scroll on over to Wednesday, we're going to have current account for the pound dollar. So you got a pound dollar trade at 5:30 a.m. on Wednesday. And then you'll have the core CPI USD CAD trade. So be looking at 8:30 a.m. again USD CAD for the core CPI there. And then we're going to go into pending home sales coming out of the U.S. right here. And so just double checking, making sure U.S. yen's been working out pretty well for us. I keep testing it out just to make sure if any pairs it decides to act a little differently. But with that report over and over again, U.S. yen still the leader. So we got the 10 a.m. pending home sales on Wednesday that we can take advantage of with the U.S. yen as well. We hop on in to Thursday. Not a whole lot going on that night. I mean, there's a lot of medium impact reports, so we could have some volatility, but not the heavily traded kind. And but then we go over to 8:30 a.m. on Thursday We're going to have 3 reports you can take advantage of. You're going to have the USD CAD. Should be a solid, big moving trade. We're going to have GDP coming out of Canada. We're going to have unemployment claims coming out of the U.S. Plus, we have RMPI and IPPI coming out of Canada. And we have final GDP quarter over quarter and final GDP price index quarter over quarter coming out of the U.S. You got 6 reports, 3 on each currency pair, and 1 high, 1 medium, 1 low on each currency pair happening at the exact same time at 8:30 a.m. on Thursday. So that's definitely a USD CAD trade. Also, with the unemployment claims, since Bernanke has decided to tie the unemployment rate into QE, then unemployment claims on really any major unemployment announcement right here in the U.S. does have a significant impact usually on the gold market. So you could also be looking at doing gold, and potentially if you see a U.S. yen trade, that may be the other option. But really, 2 ought to be enough for you: USD CAD and gold. 8:30. Look to straddle or strangle those on Nadex, and you'll start. The more you do this strategy, the more you'll love the strategy. So check it out. Definitely try it out in demo. Just make sure you get the hang of it, how everything works before you decide to go that next step. But one that you can definitely take advantage of. And then if we go over to Friday, we're going to have some bank holidays you need to be aware of. So Switzerland is going to be on bank holiday for Good Friday. Of course, Germany, they're going to be on bank holiday as well. And the target system will be closed. So even though a lot of FX may be open, the target system's closed, which really impacts liquidity on Forex quite a bit. Britain's going to close down as well. So for the exact same holiday, we're going to have the same thing happen in Canada as well. So right there across the board, we're going to have a lot of Good Friday bank holidays going on, and that's going to impact the FX markets, which of course impacts everything because everything is priced in some sort of currency. So just be aware of those holidays that are coming on up. There will be some USD reports coming out. I won't be trading them. So I really don't try trading on Good Friday. I want to take it off for a lot of different reasons. But one of those main reasons just being that liquidity dries up right around the holiday there. And so not my favorite time to trade. Now, if you are going to trade, especially on a day that's going to be less liquid, like around a holiday, then you need to be looking at something like Nadex, so that way, one small thing doesn't have a massive market spike that just really kills you and wipes out your account. So you can get defined risk trading right there on Nadex. So check that out. And I'm going to look at the Nadex holiday schedule real quick just to see what their schedule is and see if they are closed or not. They are closed for Good Friday, so you won't be able to trade on Nadex as well on Friday, March 29th. So, just a lot of times people forget about that. It's coming up, but it's coming up right around the corner. And that wraps up our news for the week. And we're going to go into the weekend. Not really much going to be happening this coming weekend. China will have some reports come out, which could have, some impact. But again, Monday, April 1st, you're going to have some more bank holidays happening over in Europe. They stay off, basically observance of Easter Monday. So they're in Switzerland, Europe, Britain. So that liquidity issue is going to continue to roll on into Monday. So make sure you're planning on it. Hope you all have a great day. Have a safe week, and I'll see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.